Good afternoon and welcome to Bull Market Stock Show. This is your host Rian Hobson, and I do apologize for skipping 2 days of broadcasting, and also that I need to start at only now at 3 o'clock. One, I was a bit under the weather, and then also we had load shedding. As we all know, that is what we experience in South Africa. But I couldn't skip today's show because it's all to do with oil and the OPEC that was actually been broadcast yesterday. And I actually saw some strange behaviors when it comes to the oil price. One of the things is that OPEC actually kept what they call tapering, where they will increase supply of oil. That is now in June and July steadily, as they say. They will increase the oil price. Now, the oil supply. Now, OPEC is the oil cartel that normally I would say control the production of oil. So they are the ones who make a decision that all the oil producers must have a certain amount of limits to push oil out. Now, normally in these circumstances, when you have an increase in oil supply, then normally what happens, the oil prices go down. Now, they said they will do it with caution. That is now 700,000 barrels per day in June and then 800,000 in July. Now, based on that news, you would have expected that those of you who knows fundamentals and trade fundamentals, you would know that oil prices would go down because of the increase in supply, but it did not. It actually went up, and it's continues still going up today with 1%. So the thing is, what they say is that there is a strong recovery in the United States when it comes to oil, and then also in Asia. And then on top of that, there is a summer now in the United States where they do expect that people will travel, and that will put more pressure on the oil supply. And then also that the people are traveling, they're having excess amount of cash, so that will increase the demand in the United States, and that will put pressure on the oil supply. Also, the United States actually also closed the Keystone Pipeline story, and they had also problems with the oil demand of that pipeline that was closed. On the other side, also, there was Iran that came in, but that story is actually having a roadblock. So there is still negotiations that goes on with the oil story of Iran based on the nuclear testing and nuclear advancement that they have in their country. So that is actually the problem with Iran, because I thought with Iran back on stream, that would actually push oil prices down. Now, when oil supply increase, normally you would have the dollar go down. When the oil supply actually increases, you will have the dollar that will go actually other way around. You have commodities that will go up, and then the dollar goes down. Now, that is what normally happens. You will have a strong oil price. You will have a weak oil price. I do apologize. When oil supply increases, you will have commodities that goes down, the dollar that goes up, and that is actually what normally happens. What is actually strange is that the dollar goes up, oil prices go up, which is not normal. Gold prices that also goes up, so all of them goes up at the same time. Now, that has all to do with the Federal Reserve now talking about tapering. Now, as I said in the last podcast, your best bet is surely to buy the dollar. If you are uncertain, then your best bet is surely buying the dollar, because there is a possibility that interest rates will go up. Also, on the other side, inflation in the United States from $2, it's now sitting close to $6 per liter of oil. So that also puts prices up in CPI inflation, and also other prices that will go up, all to do with the oil price. So a stronger dollar, what the dollar is now behaving on, is based on that they will start to taper or to cut back actually, because of the oil price that could cause actually some havoc and the excess money that is floating around the United States. On the other side, which I will do tomorrow, which is the NFP story, there is a shortage of labor, especially skilled labor, that's in the United States. Now that can actually be a huge problem, because a shortage of labor means that wages will go up, because if they employ someone, they need to employ someone at a high wage. And that could also be a problem for the Federal Reserve to tighten up. But the main story of today is actually the oil price. So the dollar actually go up because of the Federal Reserve that will look like inflation is going out of hand, people will travel, and they need to tighten up. So that's why the dollar is going up. On the other side, oil prices actually goes also up based on the tapering story, but it is actually very strange for me. But the oil prices are going up because they were talking about a heavy demand. Now, which makes it a bit strange because the oil prices go up and the commodities are going up and the dollar goes up. Now, that is very dangerous because if you look at all recessions across the world, you will see actually in 2008, 1970s, oil was a big factor that spiked up. And that is where the United States or the Federal Reserve need to put on the brakes by increasing the interest rates. And that actually led to actually a recession. Now, this could happen again. But your best bet, as I will always say, is actually to buy the dollar because of the Federal Reserve that needs to tighten up. I don't think they have much of a choice because if they delay, that could be more problems for them. So be careful on the oil story. But as OPEC confirmed that the oil prices will they will increase supply, not with much, and that is why oil prices are going up. On the other side of gold, I'm just not sure because obviously gold normally must go up because of oil prices that goes up because gold is a very good inflation hedge. On the other one, the Nasdaq, that one is also some very strange behaviors. It's sitting dead still. I'm just not sure. Will the Nasdaq push further? And I honestly doubt that. A stronger dollar will definitely push the Nasdaq down, and also it will push other currencies down like the euro, the British pound, Australia, New Zealand, a dollar down. On Canada, that is now the big one because when oil prices go up, Canadian dollar goes up. So that is also a big question mark there. Will the Canadian dollar push against the US dollar? But one thing for sure, the Canadian will actually push against the Japanese yen because the Japanese yen is very vulnerable when it comes to the higher oil price. So you need to check on CAT Japanese yen because normally that one is very highly profitable. And I think the Canadian will push against the Japanese yen. On the other side, if there's a risk associated with the global economy and with a high oil price, then that is where the yen can start to go up. But I don't see any risk now in the short term because obviously we're looking now at the Federal Reserve that will tighten up. But as I say, your best bet is the stronger dollar because the Federal Reserve will start to tighten up. I hope you guys enjoyed today's show. And then I will see you guys hopefully at 1:30, depending on the bloody load shedding. But that is it from my side. I will see you guys tomorrow, and I will definitely make the show earlier if the load shedding comes in the way. See you guys tomorrow. Bye-bye.